All right, if you earned some overtime income or one of your clients have earned overtime income, that may be deductible this year under the Schedule 1A, one of those four new types of deductions that are going to occur. Now, I did a video that kind of walks you through the process of a general calculation. I've done a video that has dealt with the overall purpose of Schedule 1A. In this short video, what I'm going to be doing is I'm going to be going through and I'm going to be actually doing the math in case you have a situation to where your modified adjusted gross income exceeds the phase out, right? So we're going to do the phase out math. We're going to give you a fact pattern and we're going to actually do the calculations on it so you know how to do this when you're dealing with a return, whether it's your own or whether it's going to be one of your clients. So let's go ahead and start by looking at the fact pattern and then we'll jump in and we'll do the math. For purposes of this example, we're going to be using a taxpayer that is single, so their filing status is single. They're going to have qualified overtime income of $14,200. So remember, that's going to be the premium portion of time and a half. That's that extra half. And then their modified adjusted gross income, which we'd find over on our part 1 in our Schedule 1A, line number 3, is going to be $158,600. Now, I can tell you that the phase out is still going to be $150,000, so we're going to see that the modified adjusted gross income is going to exceed the initial phase out portion, so we're going to have to reduce that $14,200. We're not going to get all $14,200. We're going to have to reduce it. So let's go look and see how we reduce it. All right, so here we are. We're looking at part number 3. So no tax on overtime income. So there's going to be some restrictions on this. First thing we're looking at is going to be line 14A. That's our $14,200. That's the amount of overtime that we have. Now, of that $14,200, we're finding it on W-2 box 1. During this first year, you may not have it separated out. Employers eventually will, but during this transition year, you may have to use some other type of records that you have to be able to see what your premium portion of time and a half was, that extra half. So we have $14,200, nothing from a 1099. So we're going to bring our $14,200 from line 14A all the way down to 14C. Now look at number 15. Line number 15, we have $12,500. We didn't just bring down that $14,200. Why is that? Because we are restricted. The most that we can take out as a single taxpayer is going to be $12,500 that we can deduct for purposes of Schedule 1A overtime. So we don't get all $14,200. It is limited to $12,500. So that's why we had to put $12,500 for line number 15. So we don't get the $14,200. That's already been reduced. So now we're down to a maximum amount that we can deduct of $12,500. In line 16, what we did is we brought our modified adjusted gross income from line 3 in part 1 of our Schedule 1A. So we had $158,600, but our phase out was $150,000 as shown in line 17. So when we subtract that line 17 from the 16, so $150,000 minus the $158,600, we come out with $8,600. That means that we phased out $8,600 over the phase out threshold, right? So what we're going to do now is just like we did with tip income, we're going to take that $8,600 and we're going to divide it by increments of 1,000. The reason we're doing it by $1,000 is because we're going to have a phase out of $100 for every $1,000 that you're over the amount, the $150,000, the threshold amount. So what we do is 8,600 divided by 1,000 gives us 8.6. Now we reduce it. Okay, so instead of 8.6, even though it looks like, hey, maybe we go up to 9, no, we always reduce down on this one as shown in these instructions. So we go from that 8.6 to an 8. That is taxpayer friendly because it's going to minimize the amount of your phase out. So we're going to be 8 on that. So 1,000 or 8,600 divided by 1,000 gave us 8.6. We're at 8. So what we now do for line number 20 is we're going to take that 8 and we're going to multiply it by $100 because it phases out in increments of 1,000. Well, you have 8 increments of 1,000 times $100 because it phases out by $100. So you have $800. So of the max $12,500 that we could take, you're going to be able to deduct $11,700. So all we did is subtracted line number 20 from line number 15 to get to $11,700. So even though we had overtime of $14,200, it was knocked down to $12,500, which is the max that we could take as a single taxpayer. It would have been $25,000 if we were married. And then we had to phase it out more because our modified adjusted gross income exceeded that $150,000. So $11,700 is the amount we're going to take for the deduction. If this video has been helping, go ahead and subscribe to this channel, and I will do another video. This next one is going to be on our car interest deduction.